Hello everyone, welcome to today's episode. Today is Tuesday and marks another trading day of the week. So before we go to the chart, let's check fundamentals. And looking at today, we have consumer confidence and Richmond manufacturing index. Looking at consumer confidence, previous was 102.6. We're expecting 101.0, which is negative. Richmond Manufacturing Index, previous was 3. We are expecting 1, which is also negative. At 3:05 p.m., FOMC member Waller speaks. So let's see what's going to happen. All right. Yeah, so that is the fundamentals we have. Okay, at 2 o'clock, we have S&P stroke CS Composite, the 20 HPI. And that one previous was 2.2. We're expecting 4.0, which is positive. So this is the fundamentals we have today. Now back to the chart. First of all, daily. What is happening, guys? What is happening to gold? Now, if you guys watched what happened to gold, before we woke up yesterday, gold has already hit 2018, right? 2018. And looking at today's candle, you can see that it has gone back again to 2018 and it is kind of rejecting, right? So looking at the candles, yesterday's candle rejected this level, we respected it. So if today's candle also respects that same level, then there is a possibility for gold to come back to 2000, test this level, okay, test 2006, 2005 level before it can go up, creating a new high, okay, somewhere 2030, 2050 and above. All right, that is what I see. Now let's go to H4. What is happening in H4? Now, if you look at H4, you can see that H4 has already broken this structure. H4 has already broken this structure here. All right. Now a strong candle closed above, and now you can see that the candles, even though there are rejections here, but they are still pushing. Candles, the market is still pushing up the prices. So let's wait and see what is going to happen right there. Okay, so yesterday you can see H4 actually tested this level, and that's incredible. Look at it. Look at that. It came to test the level exactly 2005.6, and boom, it flew. Okay, so let's watch the market today and see what is going to happen. So according to H4, there can be a push, a pull back to this level again here for the market to continue on pushing up. If it breaks that level, then it can come all the way here, which is 2009, 2010 level for continuation buy. All right. And like I said, if today's candle closes below 2016, then there is a high chance for the market to come all the way to 2005 again before the market will fly again. All right. So what is happening in H1? If you look at H1, you can see that this is a tweezer top formation, and there has been a pullback. So there is a potential for the market to buy. And as it is buying, now we have a level right here. Yeah. So let's watch and see what is going to happen on these zones. Okay, these are the two zones we have for which we are expecting the market to reverse. So we just need patience to wait and see what is going to happen. Okay, and if the market comes back, let me use this. If the market comes back to this zone, that will be an aggressive buy. Okay, that will be an aggressive buy. This is a high risk. The top zone is a high risk, a medium, and a low risk buy. All right. So guys, this is what is happening in the market. Sit back, wait, allow the market to play. If you get opportunity, you go into it. If you don't get opportunity, you stay away. Okay. So this is all I see in the market. This is the Panther here, and the pip must pay. Make sure to manage your risk so that if the market goes wrong, you don't lose your entire account. Okay. Stay safe. And remember, everything starts little, but it ends big if you put in the work and keep waiting, keep trusting the process, and everything will work out. And remember, the 50% for the boat is still ongoing, which ends on the 30th this month. So if you want us to pass your account for you, reach out to me and let's get you funded. All right. So guys, I'll see you and have a nice day.